please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back to Bazaar Morning Call. The Asian markets are treading water ahead of the Fed's decision, so flat to negative on some of those markets. And the SGX Nifty at the moment is flat with a bit of a negative bias. Gives us some time to talk about stocks that you need to watch out for as you head into trade today. Our entire team is standing by to talk about all of them. Guys, morning. Let's start off with you, Anuj. What are you looking at today?
So, one large cap and one mid cap, Sonia. The large cap stock I'm tracking is Lupin. It's a stock which has rallied 5% from 52-week lows. There was quite a bit of delivery accumulation yesterday and has been for last 3 or 4 days. The sense I get is this is purely a bit of a bargain buying. The stock trading at 14 times FY19 EPS. So, of course, historical low valuations on that. So that's why maybe there's some bargain buying on that. The other one is Prakash Industries. It's a stock which had strong delivery buying yesterday, respected the 20-day moving average, up 5% this month and 228% this year. Phenomenal stock. And, you know, the mid-cap metals have done well, so it fits in that category as well.
Okay, that's important. But I think today the market's eyes will be focused on Bharti Airtel after it sold a 20% stake in its DTH business to Warburg Pincus. But Ronit is here to tell us that Dish TV also will be in focus. Ronit?
Yeah, so Latha, as you said, Bharti decided to sell 20% of their stake in Bharti Telemedia, that is the D2H arm, to Warburg Pincus at around 2,200 crores. So the deal values the entire D2H business at around 11,300 crores. And if you go into the valuations, they've sold it around 11.2 times FY17 EV/EBITDA versus Dish TV that is trading around 9 times EV/EBITDA. So there's clearly a big valuation gap going on around here. So this creates, a valuation benchmark for the D2H players. So, on the back of this, you can see a light green on Dish TV today.
Okay. Like green on Dish TV as well. Bharti would be the stock to track, but towards the end there was some report on Reliance Jio as well, though it's been denied by Reliance, but there was an IPO report, Varinder.
Well, Anuj, before we comment on Reliance, of course, that's the company which owns and operates the channel you love the most, CNBC TV18, and of course the reports coming in that that Reliance Jio could come with an IPO. I think that is some buzz which has been going around, since last many months and all, but it has been denied vehemently. And if I have to just say something, it is JP Morgan report which has come in the morning. They are of course saying that if the IPO comes, it will be positive for the stock. It's not only for the traditional businesses, but important is that there will be price discovery of the digital services model business of Reliance Jio. That is more important. Most of the analysts on the street, they have been forecasting, Reliance Industries price on the basis of how Jio earnings could come in the next, 2 or 3 years. And, they are saying that Reliance current share price is valuing Jio at nearly 13 times FY20 earnings, EBITDA. So, they have already forecasted Jio EBITDA for FY20 and it is already trading around 13 times. Important thing is that how the digital services model get valued by the market is more important, and that will only happen when it's an independent listing. Jio has been performing well, if you take on any parameters in the industry. So it's a good news, but I think it's something which market has always anticipated, and it will only happen when it has to happen. It could take another 1 or 2 years, and the company has denied it.
Okay, well, we'll keep our eye out on that news piece. But for now, the denial has come through. But let's get back to that big story of the day, which is the 15-month high on inflation that we saw last evening. Latha, what would be the impact for the equity market?
Yeah, well, I guess continued rise in bond yields. Yesterday, they went up to 7.22 and came back to 7.17. So they closed at Friday's closing levels yesterday, or rather Mondays. But you will maybe see once again that visiting of that over 7.2% mark for the bond yield. So that will be initially negative for NBFCs and banks. So expect a knee-jerk reaction. It may not be continued. Like I said before, this is going to be countered a little bit by crude peaking off.
Oh yes, yesterday also most of these stocks ended at low point of the day. Some of these stocks like Canfin Homes. So some of that could be in the price. But Varinder, Monet Ispat?
Well, Anuj, Ritu was reporting this yesterday, and that yesterday was the last day of many bidders to bid for Monet Ispat. And some of the reports are suggesting that there's a consortium of Aeon Capital Partners and JSW, which has emerged as the strongest contender to acquire Monet Ispat. Aeon Capital is actually a JV between ICICI Ventures and Apollo Global Management. So if ICICI, Apollo Global Management and JSW, they come as a buyer in this asset, Monet Ispat, which has been hanging for such a long time, I believe that that'll be good for a company like Monetist Part, sitting on a debt of nearly 10,000 crores, but having assets. Importantly, this will be the first case, I think, out of the NCLT cases to go at a level where there are now buyers coming in some of the distressed assets. So hence, this case is an important one to track. We are waiting for more and more information to come from Ritu. That will keep on adding throughout the day.
Okay. Yeah, all those companies we are going to see, coming to the NCLT and looking for buyers. But the other point I wanted to add is that today, and we will get Ritu on this again, the other big pressure on the banks will be that all those remainder 29 cases will go into the NCLT, those that have not been resolved. So that again will be an added pressure on the banks.
Okay, well, let's talk about the pharma stocks. Yesterday, you saw Dr. Reddy's, how it moved because of that EIR coming in for the Bachupalli plant. Ekta's back here with us, back from her holiday, and she's going to tell us not just about Dr. Reddy's, but about Glenmark and Fortis as well. Ekta?
Yes, in fact, I'll start with Dr. Reddy since that was the top gainer on the Nifty yesterday, up 2.8% with delivery quantity 1.6 times more than the average. Now, they've got a nod for a chemotherapy drug from the US FDA. So all of this bodes well in the context that they've received that EIR for the Bachupalli unit because that means that their US approvals are now going to start picking up and hence that would be a positive for them. Glenmark HSBC maintains its hold rating, but they've cut the target price to 625 versus 700. No big ticket launches visible in the US, and plus the Buddy Form 483 would be concerns in the near term according to them. And lastly, Fortis reports of Abu Dhabi based VPS Healthcare entering the fray in order to acquire Fortis is something that we'd be watching out for. We haven't independently verified this report, but this particular VPS Healthcare is owned by an Indian radiologist, has 22 hospitals, 125 clinics in the Middle East and India, and has a revenue of around $1 billion.
Okay, Ekta, thanks a lot for that. Well, Interglobe, of course, there was a QIP earlier and now there's OFS, Sonal, to meet the public shareholding now.
Yes, absolutely, Anuj. So the offer for sale representing 11 million shares, that is 2.9% of the total shareholding, will be launched today. Now, the floor price of the OFS is at rupees 1,130, which is 4% lower than yesterday's closing price. And as you rightly mentioned, it is to meet the minimum public shareholding norms. Currently, the promoter shareholding is at 77.91%, and it will come down to 75% post this issue. So for today, due to technical issues, I expect a red on the stock, but going forth, I think that the supply overhang will be reduced.
Okay, thanks for that. Sonal, Naveen, yeah, there is this reported arrangement between Century Textiles and Grasim.
So, well, Latha, Century Textiles in fact notified it to the exchanges that they will be transferring their viscose filament yarn business to Grasim for a period of 15 years. Now, just to give a perspective, 11% of the total revenues of Century Textiles comes from viscose filament yarn, and that is around 870 crores as of FY17. So, as I pointed out, the deal is for a period of 15 years, wherein Century Textiles will be getting 600 crore as royalty plus a 200 crore security deposit. So, overall, funds coming in for Century Textile, and I expect the stock to be in the green today. Back to you.
Okay, thanks for that. Well, let's talk about some banks then. Syndicate Bank is in focus this morning. Abhishek joins in to tell us why. Abhishek?
Well, Sonia, Syndicate Bank follows the suit of PNB in terms of raising capital. So they have raised a total of 1,200 crores with a green shoe option of 500 crores. So the QIP floor price was at 88.6%, which is above 5% of yesterday's closing price. So the Tier 1 ratio, that is the capital adequacy ratio, which is very important to track, will improve by 66 basis points to about 9.86%. Equity dilution will be close to 13%, leading to government shareholding declining by 9.5% to 63.4%. So if you look at the book value as on Q2 FY18, it will be down by 6.5 rupees because the dilution price is lower than the book value. So the book value after this capital raising will be close to 131 rupees. Back to you.
Okay, thanks a lot for that, Abhishek. Mangalam, some more results?
Yes, Anuj, some more results, and a good and a bad one. Talwalkar's Fitness. Looks like a lot of people are doing Zumba this time because the revenue growth of 10% and the fixed cost nature of this business meant the EBITDA grew faster, and the margins came at 61.5%, and they got a net profit growth of 25%, also aided by some higher other income. On the other hand, doesn't look like a lot of people went to the mainland China restaurants because specialty restaurants, despite the massive rally that we've seen on the stock, Revenues were down 9%, EBITDA was down 33%. Net loss widened to about 8.6 crores. That's because of higher depreciation. They had a couple of restaurants that they opened in this quarter, so that reflected in the asset base. So depreciation came in higher. We need to really watch out for what is happening going forward for them, given the rally that we've seen on the stock as well.
Okay, thanks for that. Well, we'll watch out for that. Specialty Restaurants weak quarter. Here's a quick recap of our top stocks. Expected to gain are names like Dish TV, Bharti Airtel, Reliance, Prakash Industries, Century Textiles, Dr. Reddy's, Fortis, Lupin, Syndicate Bank and Talwalkars, while stocks expected to be under pressure, HDFC, Bajaj Finance, Indiabulls Housing, the Bank Nifty, the PSU Bank Index, Glenmark, Interglobe Aviation and Specialty Restaurants.
Okay. We need to note as well that the Reserve Bank's deadline for banks to resolve 28 large stressed accounts that the regulator had identified in its second list on June 13th. Banks were given 6 months and that deadline ends today, December 13th. Banks will have to send all these large accounts into NCLT if they are not resolved. Ritu Singh is here with that list and with the list of those that were resolved as well.
It is the 13th of December and today is the deadline for those 28 cases in RBI's second defaulter list to be resolved, and if they are not resolved as of today, they will have to be now sent to the NCLT, we understand from sources, even before the 31st of December. So, if you look at some of those 28 accounts, only a handful of very small cases, including Jaiswal, Nico, Anruk Aluminium, Built Graphic Paper and Soma Enterprises are the few accounts that have been resolved outside of the NCLT. The remaining now will have to find their way or resolution under the insolvency proceedings at the National Company Law Tribunal. These include Jayaprakash Associates, where banks had been pushing till the very last minute for the Reserve Bank of India to give an exemption, but no word has been received from the RBI on that matter so far. Videocon Industries, with its debt of 45,000 crore rupees, SR Projects, Monnet Power, Uttam Galva Steel is one more account where banks are hoping for resolution. We have not heard back whether or not that account has been resolved as of today, but the rest of them, which account for almost 2 lakh crore rupees of debt, will be sent into the NCLT, and that means banks will have to take a 50% provision upfront.
Okay, thanks for that list, Ritu. It's just that many banks like Axis and SBI have already told us that they have taken provisioning for most of these. Extremely well known, this list in the market. Yeah. So that may not be an additional burden in terms of market reaction. But yes, for the smaller banks, the provisioning hasn't yet been done.
Okay, so we would perhaps need to check with the smaller banks what is the kind of provisioning
that they plan to do.
We will know only when
the results come.
Yeah.
I mean, too much. We really don't know what is the exposure for every bank in every account. So you won't know this till the results are announced.
A bit of a trend day yesterday, especially on the Bank Nifty, which was down about 280 points. The Sensex was down 220 and the Nifty was down 82. And this morning it looks like we'll start somewhere around there with a bit of a minor downtick, though Hang Seng is in the green. But for India, of course, there's been too many variables of late. Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar now join us. Good morning, gentlemen. Ashwini, what would be your first trade looking at the trade setup?
Well, good morning. Yesterday was very easy, but today it may not be so easy. Why? Because crude has kind of come off below 64 and, global markets are a bit up and down. So today will be more sideways than yesterday. What I do expect is a 20-30 point fall comes in. So prima facie, what we are looking to do is that you have some sort of a rally, maybe 70-80 point rally on the Bank Nifty. And from there, you can get into fresh shorts. If you gap down, then I don't think there is a fresh trade. The trade will only come once you have a, first couple of hours type of rally, and then you go short into that.
Okay, fair enough. Good morning, Sudarshan. How are you going to trade the Nifty positionally?
Good morning, Latha. Yesterday morning we exited our long trades and the markets are now in some kind of a correction. So we'll just wait patiently. Support for the Nifty should come, that is for the cash Nifty, should come somewhere around 180 to 200. That's 10,180 to 200. And if Nifty comes near support, and that's the point at which I would be a willing buyer. I think that will probably happen by tomorrow morning. So today there is no trade in the Nifty and the Nifty Bank. There are short trades primarily in financials, in some other stocks, some long trades. So it's, as Ashwini said, it's going to be likely to be a choppy day, and I'll be focusing only on stocks.
Okay, Mitesh is also with us. Mitesh, you reckon that the volatility could continue, or do you expect to see a trend day on the downside, something like what we saw yesterday?
Good morning, Sonia. I think today could be a mildly volatile day, but what could possibly turn into the trend day and what I think all traders should look at is the Bank Nifty support levels of around 25,050 odd levels. If the Bank Nifty continues to decline below these levels, then it could come under severe pressure, which in which as a reaction would bring Nifty also down. Okay. So I think for the time being, I would be trading more aggressive than the Bank Nifty. It was underperforming in the rally, and if it breaks down, it could clearly have some more or a stronger momentum on the downside, and therefore trading the Bank Nifty would be more advisable. Would be comfortable selling even at current levels with a stop at about 25,275 on the Bank Nifty spot, and once 25,050 breaks, 24,800 should be your first target.
Okay, fair point. Ashwini, so you said today may not be as easy as yesterday, but positionally, what's the trade on the Nifty and the Bank Nifty before we discuss individual stocks?
See, I don't think we are going in for a major decline or a major rally unless something really changes. These are basically up and down 300-400 point Nifty style moves. This is time pass type of market. So that way you have to keep in mind that targets will be modest. So that way positionally I think Nifty, Bank Nifty, you should continue to remain short till we obviously reverse or find support, etc. Maybe 10,150, 200 is that first level of support, but I wouldn't be surprised if you get almost back towards 10,100, because in a ranging market you will often get to the boundaries. Okay. As far as individual stocks are concerned, GAIL is a buy with a stop of 485, target of 510. Raymond is a buy with a stop of 970, target of 1010. Bharti Infratel is a sell with a stop of 361, target of 344. L&T Finance is a sell with a stop of 170, target of 158. And UBL is a sell with a stop of 1040, target of 995.
Okay. You spoke about Infratel. Ashwini, any call on Bharti Airtel? I mean, they have just got a fairly decent valuation for their DTH business. So there's fundamental news today backing the stock.
It's basically range bound, 490, 560. I don't think these sort of news flows in a market that has other issues on its mind will make all that kind of a difference. Let's see how the market reacts to news, but around 550, 560, you will have profit booking.
Okay, Ashwini, just to confirm, United Breweries is a sell and not a buy, right?
Yes.
Okay, so we'll just tell the team to correct that both on ticker and on graphics. It's a sell with a stop of 1040 and a target of 995. I think there's been some mismatch on that, so we'll correct that, of course, in a bit.
Okay, let's go to Sudarshan as well and get some stock ideas. Sudarshan, you have more sell calls than buy calls today?
Yes, Sonia, just to clarify again, I'm only looking to buy the Nifty and the Bank Nifty when the opportunity arises. I do not think that opportunity will come today. So there is nothing in the indices. And there's nothing to go short in. But stocks are offering shorting opportunities. And that's what I plan to take today, most of them. So Bank of India is a short. It's a short sell. I've never been, enamored of PSU banks, and that theme continues. PSU banks probably have given up all the gains that they notched up when they had a big gap up a few weeks ago, and they're going to go lower, it seems. Then BML is a short sell. This is a day trade. You take this short sell and exit at the end of the day with whatever you get. BML has a choppy chart and some kind of a correction is going on. Cummins India is already in a bear market. When the whole market was going up, Cummins was coming down. That's a short sell also. Again, try to keep short selling only on as a day trade. Gap ups usually favor the bulls, not the bears. Gaps, which means are usually up. Infosys is a buy. It had a new high yesterday. Apparently, the correction is now behind it. And Jubilant Foodworks, which doesn't stop. It's amazing. A lot of pizza probably being used and taken. So that's a buying opportunity again. A small correction is over there.
Okay. But there's some dichotomy here. I would assume that more people prefer the variety that specialty restaurants offers. I mean, from Sigri to Asian kitchens to mainland China, they offer a lot. And if they are not doing well, but pizzas alone, one product doing well, probably something in the management of the company.
I don't know whether, you know, people have spotted this trend, but I have. Jubilant has started making their pizzas with a healthier base. They have variety of options in the health section as well. So I guess maybe that's picking up with the youth.
You know, what the new CEO has done is also is to reduce the overheads. You know, there are you know, there were big outlets. I don't know, we are not exactly simple. You know, we are not in an environment where you on an everyday basis go, and especially on a Bandra West and, you know, in town to pay that kind of rent. Just, you know, close it down, make it into a kitchen format, and, you know, have delivery. I mean, that's how things are going to flourish from here on.
Perhaps, yes. Okay, well, Mitesh, we're getting carried away by probably breakfast-related news. What's the food for thought that you have on us?
Well, that's certainly not breakfast, and I will, you know, possibly appreciate you getting carried away. A lot of people do love their pizzas very well. Coming to my stock calls, I have 3 sells and 2 buys. IDFC is a sell. Some indicators have turned negative, so most likely it could signal or see more decline. 60.25 is the stop loss, 55 is the target. REC has broken very important support levels of 150, 151. So keep a stop just above 150, 130. Look for targets around 138. And my final sell call is in Cipla. Sell with a stop at 602.5 for targets of 570. 2 buy calls. I have a buy on Mindtree with a stop at 555 for targets of 580. And Raymond, the intraday charts have again turned positive. So that's a buy with a stop at 960 for targets of around 1015.
Well, actually, intraday, all 3 of you are preferring to sell. There are more sell calls than buy calls today from all of you. But yeah, let's see how things pan out from here on. Definitely, there is going to be some bit of selling off in the bond markets. So back to the big story this morning. Inflation surging to a 15-month high. I mean, well, 15-month high is not much when the year gone by has seen even 1% and 2% inflation. But the important point is we were expecting 4.5 and we got 4.9. So that's going to be a bit of a jolt for the markets. How much are they prepared for the bond markets? Anant Narayan joins us with his take. Good morning, Anant. Thanks so much for joining us this early. What's your sense? 7.17 is where we ended yesterday. How nasty can this jar be?
Good morning, Latha. It's a pretty nasty jar. And I think there's a lot of negativity about the future as well. Negativity as well as uncertainty, which isn't good for markets. In fact, you hardly can see any silver lining as far as bond markets is concerned, right? CPI bias seems upward. Commodity prices is iffy. The mandate of the MPC is clearly linked to CPI. By the way, the December print now could be above 5%. I saw some people calling for 5.3, 5.5 as well.
Yes.
The fisc is a question mark. Liquidity is a question mark and is turning neutral soon. Next week, in fact, after the advance tax, it will turn close to neutral. Global markets are looking pretty robust. Growth, developed market growth is strong. Fed is going to come out and hike and reduce its balance sheet. And local credit offtake is looking good as well. So it's a litany of negatives for the bond market.
But didn't all this take us to 7.2 in the first place? I mean, only the inflation number is new news, isn't it?
No, absolutely. So look, a couple of things, Latha. One is, while we track the benchmark bonds, there are already the illiquid bonds going at 740, 750.
Oh.
So, you know, for a fund manager looking to build a portfolio of debt investments, we're already looking at well above the benchmark rates. Having said that, I think the opening will be soft. We will probably test yesterday's lows, 722 or thereabouts. But you're right, a lot of the negativity is priced in the bond markets. So, you know, at times like this, when everything is looking so bleak, it makes sense to look at who the buyers could be and what the positive surprise could be. One is, you know, there is the gravity of overnight rates being at 6%. You know, at such a steep curve, 1.25%, 1.5% steepness, you will see value buying in coming in from ALM desks which have capacity. You will see value buying in coming from investors as well, right? The second thing that we have to watch out for is RBI also plays this tricky role of being the merchant banker to the government. Now, at some stage, the government is going to get antsy and say, you know what, my borrowing cost is just too high. So does the government do something in terms of an OMO? Does the RBI do something to keep liquidity and bond supply and bond demand under control? That's a question mark. FPI limits, frankly, if limits are opened up much more, I think we could see a lot of supply, a lot of demand come in for bonds. 7.25%, FPI would love those bonds.
Yeah, actually, you know, Anant, did not the RBI say about a couple of months back, or, you know, 2 policies ago, that they are going to relook at the FII limits? And probably something will be done in April. Will that tantalizing thought that FIIs are going to be allowed a little more put a roof to this market? Where do you see the roof? Will it be 7.22? Will it be 7.2?
On the FII, FPI, by the way, last night RBI did come out with an announcement, but it's a small number. They announced about 6,000 crores for central government bonds and another 6,000 crores or so for state government bonds, effective Jan 1st. But that's a small number. It's not a large number. The problem there for the FPI theory really, Latha, is twofold. One is, you know, the moment you open up FPI limits, yes, the money will come in, but it will mean more dollar buying by the RBI at a time when it is already facing pressure for being a currency manipulator from the US. And the second thing is, we all know FPI debt flows can be very fickle and volatile. We are not part of global indices for debt markets, unlike you know, equity markets where we're part of MSCI. So which means at the first sign of trouble, we could see a reversal of debt flows quite quickly. So it's not really clear whether that's the kind of flows that we want. On your broader question of where is the lid for this, look, we are going to be data dependent, Latha, unfortunately. You know, we've got FOMC, then we've got the Gujarat elections, then, you know, after that, the 1st Feb, you know, budget discussions. And we don't know what the fisc side is going to look like in terms of revenue collections until maybe January or so. So unfortunately, we will be data dependent. I don't see a roof as such. In fact, I was expecting 7th quarter, but in the 1st quarter of next year, not immediately. We seem to have reached there right away. So if you have hawkish talk from an RBI, which is clearly focused on CPI, and if you have so much of uncertainty on the CPI metrics itself, you know, it's very difficult to put a roof. I would still say the bias is towards high yields, but natural gravity and demand from investors should come in. Last quick thought, Latha, you know, while we moan the rates going up, I don't think it's such bad news if the yield curve steepens the way it has. As long as short-end rates remain low, banks and you know, NBFCs typically do well when the curve is steep, especially when credit offtake is taking off. Yes, we will have treasury losses, and there'll be quite steep treasury losses. But overall, a steep curve is something the world would, you know, give our left arm to sort of get right now. And we have managed it out here through our own means. So, and plus, to reduce some of the froth in capital markets, it's not a bad idea to have longer end savings rates on the higher side. So I don't think it's all disastrous. I think it's quite desirable in some ways for us to have a steep curve at this point in time.
Okay, just one question then before we let you go. Have the odds of a rate hike increased now with the surge in inflation?
So, you know, my own personal view is that the reason why you have 10-year bond at 720 is people are afraid of rate hikes. While economists are, and you know, I also maintain that we'll have a long pause. The market, the swap market and the bond markets are factoring the possibility of liquidity tightening and rate hikes. But the problem is, you know, once a rate hike cycle starts, it won't stop with one rate hike, right? It will be a series of rate hikes thereafter. So it's very difficult to say the market has fully factored it in. But yes, the chatter about rate hikes will now start. Nobody will talk about rate cuts. It will be all rate hikes until this lovely number of CPI suddenly turns one way or the other. I mean, it can be 6%, it can be 3%. Who knows in 1 year's time, as long as it's commodity dependent.
Yeah, I guess till June we are going to have this low base and therefore a 5% plus inflation. Just a quick number. By December 31st, what is the worst we should expect in terms of a yield? I mean, that's just another 20 days or even less that I'm asking you to take a call. 18 days. 7th quarter would be the high, you think?
I think 7th quarter should hold, Latha. Having said that, I do think yields will hold, Latha. Having said that, I do think yields will move higher into the next year because of all these uncertainties that we have. And I think the fifth question, the question of CPI, the fact that commodity prices are turning, developed market growth is looking better, unfortunately will sort of, the only silver lining I see is the positioning is very light. So, you know, if you get positive news of any kind, I think the reaction will be a lot more sharper than negative news.
Okay, Anand, thanks for stopping by and speaking with us. That's the word coming in on the macros. But let's get back to the micros. We'll take a show. SP Tulsian of sptulsian.com joins in now to give us some long-term stock ideas and to talk about all the news flow that we have for the day. Mr. Tulsian, good morning. First, I wanted your view on Bharti, and not just Bharti, on Dish TV as well. After Bharti sold that 20% stake in their DTH arm, how would you approach those two stocks today?
See, first, if I take a call on the Bharti DTH sale, I don't think that this has really something, to cheer about, because if you see the deal having happened at about maybe $1.75 billion, if I'm not mistaken, because 20% has been sold to Warburg Pincus for about 350 crore. So that translates to about 1.75. Market was expecting mildly better price for that. And this amount will be used by Bharti largely for the debt reduction, if I'm not wrong. Because though they have their capex requirement, which can, either this money will go there or will reduce the debt. So that is also not significant. Looking to the Bharti Airtel having a debt of closer to about 80,000 crore. So in the background, it is mild. One can say that this is neutral for Bharti Airtel. Now coming on the Dish TV and all sort of things, I don't think, looking to the results and the scenario going ahead, as the things pan out for the sector, maybe for the DTH sector, things are not looking very rosy, because kind of competition which we have seen in the telecom are probably likely to get hot up here also in this sector because of the Reliance Jio. Because Reliance Jio is just keeping mum on this, on their foray into this in a big way, and that is likely to happen. So I think that the time for the DTH players are seen to be quite tough going ahead, and in that background, we are keeping a neutral stance on the Dish TV as well going forward.
Mr. Tulsian, good morning. This rising bond yield has, once again derailed the NBFC recovery. We've seen stocks like L&T Finance correct quite a bit. Others as well, M&M Fin, Ujjivan, GM Financial. You have been keeping positive stance on some of these. Do you think this current weakness is a great buying opportunity?
See, Anuj, firstly, to correlate the financial performance or to take an investment call on NBFC along with the rising bond yield or maybe falling bond yield is a short-term phenomenon. If you want to have a micro view maybe for 1 month, couple of months, then you may argue that yes, this is seen negative. And in fact, if you see the situation in this last couple of years, we have been in a falling interest regime, and that has definitely worked in favor of all the NBFCs. But that does not mean that they are not strong enough in rebalancing their lending and in keeping their NIM as intact. And if you see the situation, you have referred some of the microfinance companies also in the same breath, like maybe Ujjivan and all that, they are also tapping the low cost deposits also, which will be seen quite positive. When you have heard the Ujjivan management, they have said that probably, I don't remember, maybe 200-300 basis point interest cost is going to get corrected, or that will be giving them that advantage. And similar is the case with all other NBFCs. So but you have to read in the background that the kind of valuations and the kind of time horizon. If you really ask me, I have been selective, and this is what I have been saying, that yes, we are keeping positive stance on maybe the stocks like Bajaj Finance and Capital First, who are purely NBFC player, and keeping positive stance on maybe the likely gold financiers or maybe microfinance company like Manapuram, Muthoot and Ujjivan. Yeah.
Okay, point taken, Mr. Tulsian. We are going to come back to you with a lot more questions, but there was news earlier today on the exchanges that Kalpataru has received orders worth 875 crores. These are new orders, and we have with us, I think, the company joining us. Yes, Mr. Manish Munot, the Managing Director of Kalpataru Power Transmission, joins us. Manish, good morning. If you can take us through the details of these orders. We understand there are 278 orders from India, 278 crore of orders from India, and about 600 crore of orders from Afghanistan, Ivory Coast and Bangladesh. What are the margins, domestic and foreign?
Good morning. Yeah, there's a significant component from the international operations, and there's an order from the domestic operations also from a private sector client. As I've indicated earlier, also our typical margins are in the range of 9 to 11% for this kind of orders.
Okay. And by what time have you to complete? Will all these 875 crores come in FY18? How much in FY18? How much in FY19?
So a few of these orders are to be executed in 18 to 24 months, but a couple of the international orders are 24 to 36 months. So at least 40 to 50% of this should come in 18-19. The balance would go to 19-20.
Okay. Earlier you had guided for FY18 to see a revenue growth of around 15% and order inflows to be at around 8,000 crores. Would you stick to that guidance?
Yeah, we would stick to that guidance, and this orders help us to achieve that very confidently. We'll stick to the guidance of 15% growth for the current year and order inflow of approximately 8,000 crores for the year.
Okay, are you L1 already in some orders? Can we expect that you can give us a more precise figure for FY18 in terms of orders?
Sure, we are L1 in orders of approximately 2,500 crores as we speak, and we expect a lot of them to materialize before March. So that's why we're pretty confident that we should be able to touch the targeted guidance of around 8,000 crores new orders.
Okay, all right, Manish. We'll leave it at that. Thanks so much for giving us a quick snapshot of that. So that's Kalpataru Power. They've won fresh orders of 875 crores and they hold on to their guidance of a 15% revenue growth for FY18. Mr. Tulsian, a quick word on Kalpataru Power. It's had a very strong year, almost 80% gains in 2017. You see more on the back of these order wins?
Yes, Sonia, in fact, we are keeping positive bias on both Kalpataru Power as well as KC International, and both are seen to be quite, smoothly growing company with a slight improvement in their margins also seen. So keeping positive stance on both the stocks, Kalpataru Power as well as KC International.
Okay. Mr. Tulsian, the other question I wanted to ask you was about what we heard from Century Textiles. They have given Grasim rights to manage their viscose business for a period of 15 years, and the royalty is going to be about 600 crores, we now understand, for the entire period. I mean, where is all this leading? One was under the impression that probably some of the BK Birla businesses will go to, Aditya Birla Group. This kind of arrangement, is it giving you a different sense as to how the two groups will move?
See, Latha, let's understand first the Century. I'll try to give you a little background. Century has 3 divisions, that is cement, paper. I'm not including real estate in this, and if you want to add real estate, then 4 divisions: cement, paper, real estate, and viscose filament yarn. The business which they have transferred to Grasim Industries Limited for 15 years on a commuted royalty of 600 crore. So that means 40 crore per year. Now all 3 businesses are doing quite exceedingly well. I would say cement, paper, and real estate. There is no need of any kind of support or hand-holding to be given by any of the group company. Now only this viscose filament yarn business, which also makes the nylon tire cord yarn and caustic soda and all that. The establishment is at Shahad, Kalyan, near Kalyan, where the company also owns about 700 crore of 700 acres of land and all that. That has been leased out for 15 years to Grasim Industries Limited, and mind it, apart from this 40 crore annual royalty, Century Textile is also getting interest-free deposit of 200 crore from Grasim Industries. So that eventually translates into 20 crore interest saving. So take 40 crores as royalty annual and 20 crores as interest saving. Effective returns is seen to be about maybe 60 crore to Century Textile. If I take the financial performance of Century Textile for this textile division, actually this VFY viscose filament yarn division, which has been leased out, had a top line of about 970 crore for FY17, while the textile segment had a turnover of about 1500 or 1600 crore. That means 950 crore was coming from Kalyan, that is viscose filament yarn. 600 crore was coming from Bharuch unit, because the Century has 2 textile division. And again, Bharuch is a very high-tech, newly created setup of textile division, and that is also doing quite well with the brands of Century and all that held by that division or by Century Textile. So I think it is quite positive. The only negative, if I infer from this deal for Century Textile, could be that for 15 years, does it mean that the small portion of that land is not going to get developed? Because the viscose filament yarn division, along with caustic soda, which has been leased out to Grasim Industries with land appurtenant there too, obviously. The ownership remains with Century Textile. None of the ownership has been transferred to Grasim Industries. So people should not misunderstand that the land also has been transferred to Grasim Industries. So this is a very, I would say, that support or hand holding for the weak division of Century Textile, and this is seen to be quite positive. If you really want to ask me for the Grasim Industries, it doesn't make any difference. Grasim Industries is now a giant, holding company and all that. But if you really have my frank opinion, then I would say that very highly positive for Century Textile, and maybe neutral to mild negative for the Grasim Industries, because it doesn't make any difference to them, even if they lose out for 10-15 crores on this. Because even this viscose filament yarn, the deal which has happened, even that has been a profit making. It was not a loss.
Okay, sir.